Just looking at those numbers, I noticed that in terms of the top line, you're looking at a double-digit growth. And then when you come back into the profitability numbers, everything seems to sort of go down. It's now all single digits. What happened?
Yes, thank you, Godfrey. Yeah, we grew revenue by 11%, as you correctly said, to 2.8 billion rand. At the bottom line level, headline earnings per share, we grew single digits to 7%. Really, the main reason for that is our gross profit margins, which increased by about 6%, were constrained in our last financial year. That impacted the bottom line. The reason for the constraining in our gross profit margins was really a large infrastructure development projects that we had in 2016 coming to an end in 2017. So we were able to replace the business with new business, growing our revenue, but restricting the margins.
Right. And one of the numbers I also looked at was the expenses line, and I saw again that was double digit. Was that a blip, or was that sort of the environment in which you were operating?
Yeah, they were double digits. It wasn't a blip at all, actually. We were quite comfortable with the operating expenses. They increased by 11%.
What was that due to?
So the 11% increase was actually also includes our acquisitions. So if you strip out the acquisitions from our operating cost increase of 11%, our organic operating expense increased only by 2.9%.
Okay.
So, and then if you further stripped out bad debt volatility out of the numbers and just looked at our core operating expenses, organically was around 8%.
Okay.
We're quite comfortable with that because we still, although we obviously watch our costs and our expenses, we're still investing in a lot of new businesses within our group and green shoot businesses, so we were comfortable.
Absolutely. So we've done the numbers, and I think a lot of people still wonder what you guys do, because I see what you did was you reconsolidated, if you like, your operating divisions, and now you have got 3 main ones from 5. Let's look at what those are and what you are now looking at in terms of focusing on, because I see now there's now staffing and outsourcing, training and consulting, financial and healthcare. But you know the business better than I do.
Sure. So Workforce Holdings is a listed investment holding company. We're on the Altex exchange of the JSE. As you correctly said, we operate through 3 main primary clusters, staffing and outsourcing being one and our biggest, training and consulting being the second, and the third sector being financial services and healthcare. So very simply, what do? We provide people with jobs, we train them and upskill them, and we give them access to financial services and healthcare benefits. We're very proud. We employ 1,300 people permanently, and through our staffing and outsourcing business, we pay 34,000 temporary assignees every single week. We train 137,000 people last year through our 18 training centers and 103 branches. So that's our business in a nutshell, is giving people jobs, training them and upskilling them, which is a big requirement here in South Africa with the skills shortage, and giving them access to healthcare and financial services.
The unions, of course, would like to hang the labor brokers' albatross around your neck. And you're battling one big issue here. Before the Constitutional Court, I think, what are you calling it? You're calling it...
deeming provision.
Yes. Just explain for the benefit of our listeners what exactly that is and when you expect resolution on that front, and what kind of an impact that likely will have on your business. Excellent.
Okay, so the deeming provision, as you said, is just been heard in the Constitutional Court in February, so we await a decision.
You're waiting a result, okay.
What that actually means, if you had to demystify the so-called deeming provision, is it only applies to a certain category of worker. It applies to employees who earn below around 17,000 Rand a month and who work on a temporary basis at clients, corporate clients, for more than 3 months. The big question for only that category of employees is, who's the boss? Who's the employer? Is the client the employer, the sole employer, or is it dual employment between us as a temporary employment service provider like a workforce together with the client? That's the question at the Constitutional Court. The industry says dual employment, the union says sole employment. The positioning for us as an industry is to say, actually, the dual employment, Godfrey, protects the signees a lot more, because then he's got recourse both to the corporate client and to the TES. Effect on the business, regardless of the Constitution, we hope that it's dual employment. That makes it simpler for us and our clients. But regardless of the outcome of the Constitutional Court hearing, there's many available solutions that enable us to still offer the corporates the flexibility that a temporary workforce affords them.
So whichever way it goes, this will not be a knockout blow for you if it comes against you?
No, we don't think so. In fact, it's been actually quite a nice opportunity for us to actively engage with our clients again and put us in front and discuss solutions, hold their hand through it. It's a complex regulatory environment. And it's given us the opportunity to engage with our clients and assist them in this process.
Yeah, jobs is what South Africans are talking about, and it's also what Cyril Ramaphosa, not surprisingly, is talking about. And you are in the midst of that. Are you seeing anything that suggests that you're beginning to see a pickup in this jobs market? And what kind of industries would you say you're beginning to see? What do people say? What green shoots?
Yeah, right. So look, certainly last year was a tough environment, tough economic environment, tough labour environment, tough volatile political environment. So number one, we've definitely seen a much more positive atmosphere come 2018 with the change of leadership with Cyril Ramaphosa. Yeah. What's encouraging for us are some of the statements coming out of government. The two big ones that would be positive for us in terms of creating jobs is the signing of these new RPP, independent power producer agreements. Yeah. That creates jobs that we can provide those jobs to the people who are implementing these solutions. Big infrastructure development projects, which has been lacking in the past, so that's exciting for us when they do come on board. Yeah. And the second big initiative, which is exciting, is this YES program, which has also been mentioned a lot, which is an initiative between government, labour and business to create 1 million apprenticeships through South African economies over the next 3 years. And that excites us because we're in the training space and we're in the position of providing jobs, and hopefully we can be a part of that.
There's also, of course, the national minimum wage debate. I mean, you listen to the unions, they will always complain and say it's been set too low. There is a suggestion that perhaps we could see some kind of convergence, if you like, everybody coming together and getting this done. From your perspective, what kind of an impact would that have on your business?
Look, we welcome, firstly, the introduction of the national minimum wage. Our whole role is to give corporates flexibility and give people access to jobs and protect their rights in terms of their jobs. The impact to our business, a lot of our clients who are below the minimum wage will hopefully move and increase their rates to minimum wage, which is certainly the indication. So that assists us actually, because if we maintain our margins and a higher wage rate, increases our profitability. Sure. The risk would be on the flip side of clients who are deciding that the minimum wage may be a bit too high and they decide to reduce headcount and restructure. That would hurt us to an extent, but we see it as a net positive.
Absolutely.